Hey traders, this is Blake. Hold on, I'm just getting everything ready over here. Sorry, I was running a few minutes late. We just were posting that the Mark Faber interview. Mark Faber, I should say, is his name. Just so you guys can always know, so you don't ever stand corrected. If you ever get an opportunity to interview Mark, that would be how you pronounce his name. Hold on one second. All right, let me see if you guys see me okay? Hey, all right. Notice I'm wearing a collared shirt. When's the last time you've seen me wear a collared shirt before? It's been a while, right? We were just dealing with a little bit of an issue with the, these are the little silly things that that you forget is his name, Mark, is spelled with a C, not a K, but in the video we have it as a K. So now we have to make those adjustments. But it was like, you know, those little catches that you find out afterwards, unfortunately. So we're gonna take care of that. Amanda says, "What time is your court appearance?" Yeah, you know what I'm doing actually here shortly. I'm going to tell you guys this is a really let me kind of explain to you guys a video that I'm doing. I'm doing probably the most important video that that we've done. In my opinion, it's not. The reason why this video is so important, it is the 5 worst trader traits, right? It's the 5 worst trader traits in that you can possibly exhibit as a trader. And so what I was doing, and what I was doing is I was actually on a meeting, and I was being shown the hard data. And I'm going to give you a statistic really quick. And this is going to be in the video, but I want you guys to hear it here first, because you guys are a ForexAnalytix family. Justin from Forest Park FX, he showed me the hard data, and I saw, you know, I obviously for regulatory reasons, I could only see so much information. What I saw was like the P&L, and he said it. He explained it about like this: approximately 80% of open trades are negative. The magnitude of the open losses are about 5 times the amount of open gains across the board, no matter what brokerage firm you use. Think about that. Let that sink in for a minute. That's like being a smoker and seeing a real live decayed lung in front of you. You know, I know that's probably not the best analogy, but that's what it should, how it should feel. Something like that, right? Yeah, it's important. It's a huge number. Jason says, as an introducing broker, you can see that info. He's got his relationships with his brokerage firms. I think they get to see, they don't get to see like the personal information, but you get to see account balances, not account balances, but P&L open, because you got to manage your risk, right? Even as introductory brokers, you got to make sure that, you know, it's everybody watching each other. I don't know I'm not an introductory broker, but all I could see is I could see the numbers, and I was like, no accounts or anything, no personal information, nothing associated with it. But man, it is insane. What does that tell you though? Think about that. Forget all that crap, Jason. What does it tell you as a trader? That's the bull crap information. Who cares about that? What does it tell you about being a trader? If you have a trade and you have a trade on, stick to your plan. The absolute worst thing you can do, absolute worst thing that you do. And we talk about this all the time, and probably not enough, because I think about like over my career how much I've talked about this, but it's like maybe I should talk about it more often. Is if you're like me, I swing trade. So I know I'm going to be in positions for a few days, maybe a week or two, whatever. That's kind of what I do. But if you get in a trade and you're like, all right, I'm only going to risk like, 20 pips here, and you get into a position and, you're down 20 pips. Most people, they change up their trade style because they talk themselves into the position. They're like, I was going to risk 20 pips, but I think I'm going to hold it a little bit longer because I think the euro is going to, it's going to go up here. So I still want to be long. I thought I really wanted to be long in the first place. And next thing you know, you're in a swing trade, right? A few days later, you're in the trade and now you're down like 80 pips and you're just down 80 pips and you're like, now what you're doing is you're changing up your trade style, you're changing up your trading plan. You should always have a line in the sand. Like, I'm getting out when the trade hits here. It was wrong and I shouldn't be in that trade. So what happens is most people, they have a tough time accepting they're taking losses, and they have a hard time taking the loss. And so they just sit in the trade until it's too late. And it ties up mental capacity, your margin that you can use. But really, what I found over the years is it really takes up the mental capacity of the market. Like if you're in a trade, like every trade on my board, I know the risk. My stop is in. Like, dude, it sucks. I'm like, I can sit in a trade. Like I'm in the Aussie yen. I had my stops above 108, even though I had to put the pattern in play a little closer from a risk reward perspective. I'm still in the trade, but I'm like, if I get stopped out, it's like I already know what my loss is, right? So I don't even think about like the trade that trade, because it's not like it's not a, to me it's just like, okay, well, I'm out. But what people do is they get, and this is the problem with when you talk about leverage and everything else, you get in a trade and you're like, I am so sure the euro is going to 125, so sure. And you're like, I'm going to take, this is my shot. I'm going to take a big position, right? And what happens? Day like today, you bought it at 122, it goes up to it races up to the resistance that you guys, if you're in the chat room, you knew I was trying to get it. I was trying to get a short off right here at 122. My order is at 122.24. Obviously it didn't get triggered, but like, let's say you were, you were bullish and you're like, dude, it's going to 125. And then you get long, right? So you got long, the thing's now down and you're like, I'm confident this thing's going to 125. Confident. I'm going to sit in it. So now, you sit in it, and then tomorrow, the inflation data is like out of control strong. The euro drops down through the support at 120, 21.20. You're like, well, I always thought that it could drop back down to 120 and then it'll eventually bounce, right? Because this support's going to hold. And 3 weeks later, it breaks through 120, and you're not only in a negative, 300 pip position, but you're in a really negative position because this is your one shot. Remember? and you took a super aggressive position on this breakout because you were confident at that moment it was going to 125. That is what happens. That trade. And it doesn't happen to just you. It doesn't happen to just me. It happens to everybody. That's why it's like, okay, I bought it at 122. I'm putting my stop right here. And if it drops back below here, I'm getting out. 122, you bought it at, 122.15 on a breakout because you're convinced it's going to 125. It drops down to 121.90. You get out, you take a 20 pip loss, and you're like, damn, that sucked. That was my shot. But isn't it better taking that 20 pip loss than a 300 pip loss 3 weeks later? And guess what happens? That I just turned this into a total training session and not the daily roundup, but that's okay, right? It's okay. But what happened over the next 3 weeks? Because you were in such an aggressive long euro position. The next 3 weeks, you miss every opportunity out there. Why? Because you were focused so much on the euro going to 125 that who knows what the hell happened. The cable could have dropped from 140 to 137 in the meantime, and you knew that once it breaks 140, it's a breakdown, but you completely missed that trade because you're so focused on the euro and your loss, or the Aussie, or the Kiwi, or the Canadian, or whatever. So I reached out to Justin from Forest Park FX because he said that, remember he did that interview, was it a week and a half ago? He did that interview, and I was like, wow, that's some statistic that I forget what he said. It was like, it was around the whatever numbers I said. And I'm like, I have to reach out to him and get the real numbers because I need to convey this to you guys. And when I'm making this video about the 5 worst trader trades, I've got to convey that information to everybody and make sure it sticks because it's so important. And look, I'm not going to tell you that that's never happened to me. That's happened to me. Even when I was trading for Gelos over the last couple of years, I get in a position, I'm just like, dude, I'm sitting in a position, I'm like, man, I just don't want to be in this position right now, but I'm confident that this thing's going to turn around. Even though I just let my stops, my trades more went like this. It was a day trade turned into a couple day hold. And then after a couple of days, I just cut and run, right? But I did the exact same thing. It's the exact same thing. So let me read a couple of comments from you guys really quick. Austin said, that's insane. It is insane. Jason says, FX trading is difficult, but you have to manage your risk. 100%. Alex says, you have to be very careful calculating risk. Yeah, you have to calculate risk and stick to it. Jason says, it's also very difficult right now as FX volatility is still very low, very low. I 100% agree. Kevin says, it's like Las Vegas. The majority of the people that go there lose. It's why Vegas keeps building. Yeah, like every time I would leave Las Vegas, like no joke, there's a statistic that used to be, this is like 20 years ago, every head that was on a plane going to Vegas was worth $500. That was like 20 years ago to Vegas, right? Every head on an airplane that was going to Vegas. Now it's probably like 1,000. And I used to, every time I'd leave Vegas, because I would go and, because I live in Phoenix, and even when I was a trader starting here, I used to go to Vegas all the time. I mean, it was $29 flights, round trip, $29. We wouldn't even get hotel rooms. We would actually fly out on a Saturday night and come back on a Sunday like afternoon, just like on a standby. We wouldn't even get a hotel room. We would just kind of go. Anyway, when we would do that, 25 years ago, I would always I'm like, how many chandeliers did I buy on the way? That was what I was thinking to myself. Let's see. So I was in the Bellagio and I probably paid for 2 chandeliers. Always went through my mind. Tony said, it's okay to be wrong. It's not okay to stay wrong. Copyright Blaker. Raj says, our ego comes in the way. Feeling stupid that you made a mistake. It does, Raj. It really does. Steph says, that never happens to me. Hard sarcasm, lesson learned, and it happened exactly how you just explained it. Malia says, this is exactly what I needed to hear right now. Thank you. You're welcome. You're welcome. Look, Amira asked for W wrap, so I'm gonna wrap it with that. Looks like it's rejecting at the 618. I'll just tell you right now. Yep, it sure did. So you got to be careful while it's below this 845. Okay, I'm going to leave you guys with this. Wait, Jason said, Blake, do you think your longevity was due to luck initially and then skill later? I say this because I listened to your Chat with Traders interview, and that's how you went through a very difficult stretch before hitting a big trade. That big trade basically launched your career. Yeah, it did. But then you have to realize it was luck, then not luck, because I lost everything after September 11th. So I made it all in the 90s, and then I lost it basically all after September 11th. And then I had to rebuild after that. So yeah, it was luck. I think it was luck. But here's the difference. Let me explain to you the difference. We didn't have anybody to teach us. And that goes back to me telling you what I'm going to leave you off with right now. We're all in this together. We are. We take bad trades together. We take good trades together. It's all about managing trades, really managing risk. That's what it's all about. Okay. But I want to leave you with this. What we do here at ForexAnalytix is we try to do our best to make sure you're going to be here tomorrow and the next day, and for the good times, not only for the bad times, but for the good times, right? And see, when I started trading in the 90s, yeah, there were some traders around me, and there were a couple of really good traders, and you learn from them. Most of them are like, get away from me, I like look over their shoulder. They're like, dude, back away, that type of thing. But we didn't have like companies that really would educate and teach you these things, these skills. And that's the difference. And that's why we continue to do what we do, because I want you to be a ForexAnalytix subscriber. I want you to be a part of the ForexAnalytix family forever, if that can be, help support my company, all the guys and gals that are with us that you see in front of you, that you don't see behind the scenes, that do different things like editing and translating and things like that. It's to keep the whole organization going. Yeah, I want you guys to succeed, but I want you to succeed because I want you guys to have your shot and to make it. But the only way we're going to do that is by educating you about these things that can, especially when the markets are as difficult as they are right now, right? So manage your risk. As Tony said, it's okay to be wrong. It's not okay to stay wrong. All right, guys. I hope you all have a great one. Raj says it feels like you're talking to me. It looks like a one-on-one session. Well, I am talking to you. So have a great one. You guys have a great afternoon, and I will, or evening, and I'll see you guys in the chat rooms. I got to go film that video. All right. Talk to you guys soon. Bye-bye.